let's look at exact sciences. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to the megatrends, and we will look at a theme called early medical intervention. So the essence here of this theme is that, these are companies that, their mission is to detect and deal with illness very quickly, because the earlier you deal with it, the better, of course. Hence, there is, a significant demand for these kinds of solutions. So, Exact Sciences, they are in the cancer diagnostics industry. 44% here from the low, minus 36% pullback from the highs. So here is the company's website. So cancer is detected too late. Exact Sciences is changing the way we think about detecting and treating cancer. As a leader in cancer testing, we are committed to providing earlier answers and life-changing treatment guidance. Yeah, so here is some additional information. Okay, so let's look at the chart. So this is the long-term picture. It does move in waves, but when I tried to draw in, time cycles, I didn't find them to be that consistent. Because, the key thing about time cycles when you use this tool is that it draws time cycles that are of similar size. Well, you can see in this case, it does move in time cycles, but then all of a sudden you have a big one, then two smaller, then a big one, a small. So yeah, it is a bit messy. But the essence here is that this is one of those stocks where you want to buy low and sell high. That's the basic thing. Simply because the moves are so big. So during a correction, this one can easily go down 70%, which is something you just can't like diamond hand that. Here as an example, it pulled back minus 43%. Way too much to just hold on. So the interesting thing happening at the moment is that we are interacting with a very key moving average. So you can see here that historically the blue 100-week moving average has been a key level where the bulls have a tendency to show up. There have been instances where we do break down further and test the red 200-week moving average. So that's something we have to respect. The key thing, however, is that in this case, right here and right now, we are seeing that, the moving average, it matters. So here it was a nice buying opportunity. So let's measure here up to this high, 36%. That's pretty healthy. We break above, major rally. So now we are testing that key moving average again. So given that, the blue 100-week moving average, it has been important in the past, there's a pretty decent probability that it will be that now as a support level. The reason why we might not go down to the red 200-week moving average is because we did test that moving average not that far back. We see that historically, we usually have a decent rally after we test the 200-week. So the testing the 200-week is more rare. So that is, it corroborates the idea that this could potentially be a buying opportunity. So there's something bullish here about the chart. The bearish aspect I see here, which we need to respect, is the head and shoulders pattern, which means that we really need the bulls to buy soon. Okay, they can't wait because this is a key technical pattern that could become rather bearish. And if we do test the red 200-week moving average as a part of a head and shoulders pattern, that is not an ideal way to test it. Looking here at the daily data points, we are kind of hovering a bit in mid-air. Though the interesting thing is that we do actually have some pretty decent horizontal support levels that we also hope should hold. Like here, 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 and here. And also here as well. So basically we are at horizontal support, we are at a low RSI level that tends to attract buyers. The PPO is also at a low level that more often than not is bought. When we go here to the seasonality, over the last 5 years, August and September have been rather strong. The last 10 years, you see that there is a clear strengthening here into August, September. Looking at the last 20 years, August is a bit mediocre, but September is one of the strongest months. So the seasonality leans bullish. Looking here at the Finviz, we are not interacting with any trend lines at the moment. The price targets are very interesting. So the stock price is at $102, and here are a bunch of recent price targets that are significantly above the current stock price. So if we take the price target of $145, that is 42% above the current level. If we take the high level, let's say we take, let's take this $160. That was from Canaccord Genuity. That would mean 57-ish% upside. SACS, they have a number for sell. D value, C growth, A momentum. Bottom 22%. Industry rank, industry, medical, biomedical, and genetics. No dividend, 17-ish billions dollars in market cap, so it's there's some size to the company. So if I were to sum up my take here for this stock, I think that when we take the evidence together, there's more reasons to be bullish than bearish. The key thing is that we do definitively want to have a line in the sand, and I do think that the horizontal support we found on the daily data points, it should hold. So we do expect the bulls to use it. If they don't use it, that is certainly a problem for a bullish thesis. And also the 100-week moving average in blue, it should attract buyers. If we start to, if we test, the 200-week again, then that is a bit of a change in dynamics, and then we also would have a head and shoulders pattern, which is not really ideal. So there's too many reasons here for the bulls to get into action. So that is the primary thesis. And if they do not come into action here, given all of those reasons I have mentioned, then that's obviously wouldn't be good. But the theme is definitively very interesting, and the stock is interesting as well, and the company.